All right. So today we're going to be doing a bit of a different type of trade recap. We missed the one on Friday, the 5th, and to catch up on those trades and today's trades would just be too much. And I do want to talk about some changes in my strategy today as well. So we're going to focus more so on that, the changes. So, um, on Friday, we took a $94 loss on the day after commissions. Um, and the reason commissions ended up being such a big part of our loss was because if you look at the volume that I traded, I was only taking 50 share positions almost the entire day. Uh, and because of this, I was actually spending almost double my normal commission rate because in order to pay the bare minimum for commissions, you have to use at least 125 shares. So when I'm using 50 shares, I'm basically paying more than double what I should be paying for commissions. So after Friday, I took this weekend and I decided to import all of my trades from Friday into an Excel sheet right here. And I did some data crunching on this. So I'm trying to find what stocks I trade best, and in order to do that, you have to pour through the data. So here's Friday's trades, and I separated it by price and by time held. I was gonna do share size, but I'm just gonna skip that because the price and the how long I'm holding it seem to be bigger factors and more significant, and whether I did good on the trade or not. So what I did was I separated them out into three categories. So $2 to $5, $5 to $10, and then anything above $10. As you can see, my highest accuracy is on stocks between $5 to $10 with a 67% accuracy. And then the reason why the stocks between $2 to $5 is such a low win rate is because there was only three trades. So I don't count this really as a correct sample size, especially when those two losers were pretty much scratch trades. So I don't really count this as a big enough sample size to do stuff on the $2 to $5 range, but we have enough data for 5 to 10 and above $10. So we used this spreadsheet to make a decision about whether we should trade these stocks or not. And we came to the conclusion that our $5 to $10 stocks is our best range when it comes to trading this scalping strategy and this dip buying strategy because um, we have a high win rate on it, and on average, we even though we win 16 cents per trade and lose 23 cents per trade, we're actually and we have a net 0.07 loss per trade per share. When all things are said and done, that high accuracy um, negates the 0.07 cent per share loss. So basically, um, we had a gross gain of $120 on those stocks and a net gain of $96. And for some reason, on Friday, the stocks that I traded above $10, they would flush 30 to 50 cents at a time. And I was getting in on some of these, I was actually getting in on dips, but they would end up dipping even lower, and I'd have to stop out for a really big loss. So a lot of the trades I took on uh, Friday, they were really, really big losses over $10. So, I mean over $10, the stock price, not that lost. The loss was like $50, $30, 40, 50, and my wins were only like 19, 14, 9, 20, 6. So my winners are generally smaller than my losers, and in order for this to be a profitable strategy, we need to focus and eliminate anything that's not giving us profit right here and here. Those are not profitable for us. So I was like, okay, well maybe it's just a fluke. Maybe it's not because of the above $10. Maybe it's because we're holding and hoping. Maybe we're not selling losers fast enough. And so I go to I duplicate the chart and I do it by time held instead. And this is in seconds. So I separate it into four sections. Under 5 seconds, between 5 seconds and 10 seconds is the yellow. But between 10 to 30 seconds is the red, and anything above 30 seconds is boxed in red. And some interesting conclusions came out of this, and that is that my most profitable area of time held is under 5 seconds, but that's not that surprising considering I am trying to scalp these stocks. So I should have a high win rate when I'm going for little 2 second trades. That makes sense. But what I don't like here is that my above 30 seconds is a 16% win rate, which means that all of these trades, all of these 6 trades where I'm over 30 seconds, I'm only holding and hoping that this is going to come back up to my entry. This isn't, these are all just holding and hoping. And those come from, here's a 23-cent loss, here's a 10-cent loss, an 82-cent loss, almost $1 a share. Here we do have $1 a share, and here's $50 or 50 cents a share. These are all huge, huge losses, and they're held for that long, long time because we're hoping that it's going to come back up to our starting price, but it doesn't do that. And so we need to sell those losers when it, so if we're getting into a trade, we're expecting to sell it pretty much right away, and that's what this is all about. We get into a trade, we expect to sell it. So if we get into a trade and we're not getting the results we want to sell it for profit, why are we holding it till it becomes something even worse than we could imagine? Why not take the 10, 15, $20 loss? It pushes us back 1 to 3 trades and then come back and get our accuracy back and make that money back. Why not? Why do we have to hold it till it's a $50 loss and we have to take another 6 to 10 trades just to make it back? That doesn't make any sense. We're just that makes our profit loss ratio insanely terrible. So, as you can see, a lot of our almost out of our total losses for the day, 282, 137 of them came from the holding and hoping. So we just negate those and turn them into like $10 losers. Let's say we had 6 $10 losers. We get $70 back and we're almost green on the day. Like, we have to stop holding and hoping, and we need to stop trading stocks over $10. So that is what I did with the spreadsheet for Friday's trades. And then I also made some changes to my strategy document that I have. This is what it used to be, and I would have I would be I see how I have some prices where it's like, oh, below $2, don't trade it. If you are gonna trade it with 500 shares. If you're gonna trade anything above $10, be cautious. I mean, this is all stuff that makes sense and it kind of corresponds to um our spreadsheet. But um we still have these stocks as part of our game plan. they should not be part of our game plan because we can't trade them. We're not profitable on them. So what I ended up doing is I took all those off, and now I only have these on there. I'm only trading stocks between $2 and $10, and how this goes is on my first trade, I trade with half the size, and then um, after we hit our goal, if we ever do, because it doesn't seem like we are right now, but when we do, we're going to come back to this low size, so we don't give back profits. So from there, we're looking to take a couple of small green trades to build a $10 to $20 cushion before we start going into our normal starter sizes. Okay. Um, so from there, we move on to our normal starter positions, and if we're having a great day, we increase our starter size only slightly, probably like to 250 and 200. And this is assuming we're having like a $100 day, $150 day, $200 day. Then we can go, oh yeah, yeah, yeah. We're doing insane, and then like we're like riding this stock that's halting up and going dollars per share. That's what this is assuming. It's not saying that, oh, I'm having a $50 day. No, 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 that goes into this category, a normal day. Okay. If you're having a bad day, remember the rules. The rules are three what's it called? If you go and you hit your max loss, that you're done. Okay. If you start off with a loss greater than $20, you're done. There's no pre-market trading. There's yeah, that's pretty much it. No trading stocks between $2 and $10. All right, but below $2 and above $10. And um yeah, basically you start to get a sense for when you're having a bad day and you kind of want to step back and look at it to see if it's even worth trading at that point. And then if we have a normal day, we're gonna stop or slow down after hitting our daily goal. And if you give back 20% or more of your gains after hitting your goal, then walk away. If I'm up if I'm up $80 and I lose 20, just walk away. You gave back 25%, well, walk away. You're done. Keep the 60 in your pocket. If you give back all your profits for some reason, if I didn't follow this rule of lowering the share size after hitting their daily goal, and um, I somehow take a really big loss and I lose everything that I made that day, and I go zero or red on the day, I will be too emotional to try and make that back. I need to stop trading for that day. Come back in tomorrow. Um, Basically, in order to avoid giving back all our profits, we have to follow this rule of reducing our share size back down to avoid that risk of a big loss. So this is the new trade plan I have. I have it printed out. It's posted on my wall right next to my trading station. It's right there. And yeah, I'm trying to follow it to the best of my abilities. So this was Friday. Um, let's see here. And this is today. So today, oh, one more thing I wanted to talk about. I'm actually starting to have a lot of anxiety when it comes to trading. For some reason, I think it's because my account's getting really small. My account is now only at, after today, only at 660. And so, because of that, because of the $500 limit that CMEG has, I am getting fearful of blowing up my account. So, it's causing a lot of anxiety in my trading, and it's actually becoming a real struggle. Like, I a couple of these trades, like actually this trade right here, this $52 loss, I didn't actually mean to get into it, but I was shaking so much from after taking this $41 loss. I was shaking so much, my hands were shaking, and I accidentally hit the buy bid on a what's it called? It was dipping down, the stock was dipping down, and I was looking to buy a dip trade. And um I canceled the order, but when I canceled it, I accidentally tapped the buy button again. I got filled after it had so it let's see. So the stock had gone up, it had gone up, really up, and it had just dipped, and I was trying to buy right here, and it popped back up, so I canceled my order because I didn't get filled. It popped back up to here, and in this time, from here to here, um, I had canceled my order and accidentally hit the buy button right here, and it plummets again for a second dip. So my anxiety from the first loss had triggered this like fight or flight response, and I was severely shaking. I don't know, it was like uncontrollable shaking. And so I accidentally, my finger twitched and it clicked my mouse. And um, yeah, it was not a good day. Starting off down 93, 94. Yeah, another thing that's happening, so I get shakes whenever I'm trading, and they're pretty uncontrollable. I try to breathe through it. I do like little breathing exercises throughout in between trades to kind of calm myself down. But I don't know. I really need um mentally I need a green day, uh, or at least two consecutive green days in the near future. Otherwise, it's gonna get too bad to be able to trade. So I'm also having what's it called? Um, I don't want to call it a panic attack because I'm not. I don't feel like that's what the term would be for it, but it's more so like the fight or flight response that many traders experience when dealing with lots of financial loss. So, today, going into today, I was able to use those breathing techniques to um get through the morning session, the morning trading session of the open, and from there, I wasn't shaking today. I could say that. I wasn't shaking today. I had a little bit of a hard time breathing, but that I was just really focused on the trades, and I don't know. I guess I forgot to breathe. Not really. I was getting really tight in my chest, but I ended up down 48 after the morning session, and I come back about, yeah, 3 hours later, or 2 hours later, and I start my afternoon session because I had saw that OPGN was popping up and it was in my price range. Or yeah, where is it? Yeah, it was at $3 a share, so it was in my price range, and okay, I don't know what happened there. But it was in my price range, and I was popping up on the high day scanner, and I was just looking to take some quick scalps, maybe dig myself out of this $50 hole. So what ends up happening is right here, you can see I dig myself back to green, but at this point, I had taken like another, so I'd only taken 9 trades in the morning. My commissions were like 10, $15 for the day, so it wasn't that bad. But after trying to climb back to green, my commissions ended up being around 30, $40. And so even though I was up like 25 here, I was still down 17, 18, 20 on the day. And I was really looking forward to getting to green. Um, and so what ends up happening here is after this point, I'm down like $4 on the day. And I take a, let's see, what was it? It was a $18 loss, and I go back to being down 29 on the day. right here. Sorry, right here. I go back to being down 29 on the day, and I call it there, and I'm like, okay, at least I made back 20 bucks from the lows of today. I made back 20 bucks after commissions. So I'm down 30. And then for power hour, I came back in again. This was a mistake, but I did see that AEZE or AEZS was at its high of day, squeezing into the end, and I had traded that earlier for small profit, and so I thought it would be I could scalp maybe like 10, 20 bucks from it, and I ended up giving back another 20 bucks and ending the day down $50, um, just like I had back here. So all of this trading from afternoon to power hour, that was all, it didn't do anything besides raise my commissions. So I ended the day down 50 today, and um, interestingly enough, I remember how I talked about how I didn't have any anxiety during the morning trades. And I went down 50 and I called it there. When I came back in the afternoon, instantly, my shakes were back. I couldn't breathe, and I I I don't know. It's kind of hard to talk about. It's like my body's trying to tell me to what I'm doing is like wrong in quotes, but what I'm seeing is opportunity to make back what I had lost. But because my account has so little room for error, I'm getting anytime I take something that has the potential to make my daily loss from 50 to 70 or 50 to 90, anything that could make my loss get bigger is creating immense amount of anxiety for me. And so I didn't have any shakes back here, but during afternoon I had shakes, couldn't breathe, and um, I'm trying to figure out a way to get around it because what ends up happening is after I close the platform down, my shakes are gone. I'm done trading. My anxiety is pulling back. I stop shaking. I can start. I drink some water, and what ends up happening is the feeling of tightness in my chest. It lingers, and it's not a good feeling. It really isn't. But it lingers for half an hour to an hour after I close my platform and move on to doing other things with my day. It's still there, that feeling in my chest. So I'm trying to figure out what I should do about that. And yeah, I know we didn't go over any specific trades today. The trades are basically mimicking everything else. As you can see today, I took more volume than Friday. I tried making sure that my starter sizes were 100. A couple of them were 200. I had a few trades where I dip bought for 300 shares. Um, and so I tried following my strategy here. My dip buys are 300, 200. My starters are 200, 150. And I'm expecting 20 to or 10 to $20 per trade. So, and then larger gains on dips. So, going into tomorrow, I'm gonna try and uh, work on this anxiety thing of mine. It's something I have to deal with, so that's something that needs to be worked on throughout this week. The account is now at 660 bucks, so I can end the week at 800, 850. That would be nice. That'd be really nice. It'd probably lower my anxiety too, being further away from the blown up account state. And so, with that, I'm gonna let you guys go. Uh, I'll be back tomorrow, hopefully, with some good news. And yeah, we're just gonna trade it like it's another day. And yeah, all right. I'll see you guys tomorrow. Goodbye.